Hello everyone and welcome to my channel. So on Sunday we did a weekly outlook of what we were expecting our price to do, and I also marked my key levels for the week. So in this video here I'm going to do GBPUSD. I'm just going to share with you the kind of how we would have taken advantage of this move this week. So GBPUSD, our weekly outlook, our target was this fair value gap here. This is the weekly fair value gap, and our key point of interest with this daily fair value gap. This is what we wanted. This was our last line of defense. We actually wanted to see price react from this fair value gap and move to our key target. So now, as you can see here on Monday, this is Monday candle and this is Tuesday candle. So Monday, Tuesday price retraced to our daily fair value gap, and then Wednesday is when we had FOMC. So Wednesday and Thursday is when price now reacted our key point of interest, which is this daily fair value gap. So now, for those people who are in my Telegram group, so on Wednesday I sent you this. I told you that I'm still looking at this weekly fair value gap as my target, and I'm still watching this region as my point of interest. So let's move to the 4 hour and see what price did, what I was looking at. So after the FOMC release on Wednesday here, this is our Wednesday. After we had this, after I saw price had closed below this fair value gap, I considered this an inversion fair value gap, which it is. It's an inversion fair value gap. So on Thursday, I was looking at this inversion fair value gap as a point in which we can use to look for trades for price to go further down. So let's go see on the 15 minutes. So if our higher time frame PDRE is 4 hour, our lower time frame is 15 minutes. So let's go see on Thursday what price did on the lower time frame. So on Thursday, which is yesterday, this is our 4 hour inversion fair value gap. As you can see, during Asia, price tagged our PDRE. Once price tagged our PDRE, remember, for those who have been following me for some time, if you're on my TikTok and Telegram, you know the things that I look for. Once price tags our really high time frame PDRE, we look for market structure shift, and also we need to see a liquidity sweep. So during Asia, we took out this high. So this is a liquidity sweep here. And then before London kill zone, which is the time that we're supposed to take our trades, London or New York, we got a market structure shift. So during London kill zone, the only way you would have taken advantage of this move is to enter using this fair value gap. You would have taken a continuation trade. So yes, we have such examples. Go check GBP and ZD trade that I sent on Telegram. You will see that that is one of the examples where liquidity sweep and market structure shift in our higher time frame PDRE happens before our kill zone time. Then our kill zone time is now when we just take a continuation setup, and that is what happened. You would have taken advantage of this fair value gap. Is where you would have entered your trade. Let's say if you would have entered on this fair value gap here. So during London, and where would you have put your stop loss? So guys, when it comes to stop loss, ICT says you can either put your stop loss right above the PDRE that you're using for entry, the fair value gap, or at the swing high before you got your entry. So in this case here, above this fair value gap, we also have another fair value gap. So if you have two consecutive PDREs, you have to factor that. So if you're going to put your stop loss needed to have been above this here, this high here, so that we take care of this fair value gap too. And then so yeah, so if that would have been your entry, remember 1:2. Again, another thing when you're considering when you're using fair value gap, if you have a big fair value gap like this, you can take a Fibonacci and just mark the 0.5 region. So you have 0.5, you have 0.25 region. So those are the two regions that you can decide to use for entry whenever you have a big fair value gap, or you have a situation where two consecutive fair value gaps are following each other. So if you did not get a setup during London, as you can see during New York kill zone and London close, we also had another setup. So finally, price still came back to our 4-hour inversion fair value gap. So when price came back to our inversion fair value gap, we still got a liquidity sweep, which is here, this one here. We took out this high here. So we took out that high. We also took out this high here. So we took out this high and this high. So that's a liquidity sweep. And then after that, price gave us what? A market structure shift. This here is a market structure shift. Let me just remove this. So this right here is a market structure shift. Once this candle body closed below this swing low here, that is what you consider a market structure shift. And then after that, what did we get? We have this fair value gap here. Again, this is where you would have also taken advantage of this move. Take your entry on that fair value gap. And where do you normally take your tip? Session liquidities can be used for take profits. And stop loss, where would you have put your stop loss? So this is fair value gap. The candle that created this fair value gap is here. But you can see again, here we still have another fair value gap. So we also have to factor that. So our stop loss in this case would have been above this high, above this candle that formed this fair value gap here, that high or even this swing high, but this high here is still good enough. And if you're taking take profit is here, this would have been how many? 3. This is 1:3. But if you target 1:2, that would have been 48 pips here. 1:2, this would have been your take profit, and you're done with that trade. So that is how you'd have taken advantage of that move for GBPUSD.